Recently, the Securities and Exchange Board of India, or SEBI, issued an order that wrapped up one of the strangest and the most fascinating fraud case that it has handled in recent years. Now, at the very center of this is a familiar face from television, Hemant Khai, who used to appear every single morning on CNBC Awaz, which is one of India's most watched business news channels. Now, his work placed him in a position of trust because viewers typically relied on his recommendations to decide which stocks to buy or to sell. But after a detailed investigation, SEBI found out that he had been taking advantage of this particular trust by trading shares ahead of his own stock tips on live television. Welcome to the Daily Brief show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is very easy for all of us to understand, yet one level deeper as compared to your traditional news channels. I am your host Anurag Bansal, and today is Tuesday, the 25th of March. In today's episode, I'll talk about two interesting stories. In the first story of the day, I'll talk about how SEBI has recently wrapped up one of the strangest and the most fascinating cases of fraud in recent times. And in the second story of the day, I'll talk about how wind energy has shown almost no growth in the past few years, while solar energy has grown multifold. Let's begin with the first one. Recently, the Securities and Exchange Board of India, or SEBI, issued an order that wrapped up one of the strangest and the most fascinating fraud case that it has handled in recent years. Now, at the very center of this is a familiar face from television, Hemant Khai, who used to appear every single morning on CNBC Awaz, which is one of India's most watched business news channels. Now, his work placed him in a position of trust because viewers typically relied on his recommendations to decide which stocks to buy or to sell. But after a detailed investigation, SEBI found out that he had been taking advantage of this particular trust by trading shares ahead of his own stock tips on live television. Now, all of this began when SEBI noticed a very suspicious pattern in two trading accounts. These accounts were in the name of Hemant's wife Jaya and his mother Sham Mohini. From 2018 to early 2021, these two accounts were somehow buying stocks just hours or even minutes before Hemant recommended those very stocks on air. And by the time viewers were piling in stocks, Jaya and Sham would sell their shares for a quick profit. Now, SEBI grew suspicious over here because this pattern repeated over and over again, and it was way too accurate and profitable to be called a coincidence. So in January 2021, SEBI froze the family's trading activity and began looking deeper into how these trades were happening. Over the next several months, SEBI dug through trade records, emails, and interviews with Hemant's co-workers at CNBC Awaz. The investigation revealed that the anchors on Hemant's morning show usually decided on their list of recommended stocks in advance, often by afternoon or evening on the day before the broadcast. And this gave them enough time to prepare their commentary. They even had an informal process called Lungi, where the anchor would pick a stock first, so the co-host could not pick the same one. These selections were then circulated among the teams through emails or WhatsApp. In Hemant's case, it turned out that these advanced picks matched almost perfectly with the trades that were being placed in Jaya's and Sham's accounts before the show aired on TV. But there was still a question of who was actually placing orders. Jaya and Sham were listed as the official owners of these accounts, but SEBI actually found out that Hemant's own phone number and email ID were linked to them. One-time passwords or OTPs for trades went to his phone, and bank data suggested that all the transactions were happening from the same device that he had used. Documents that were supposed to prove Jaya and Sham had authorized those trades turned out to have signatures that did not match their actual signatures. Jaya later told SEBI that she had never signed such documents at all, which pointed to them being created as part of a cover-up process. SEBI also discovered that the main broker, which is Motilal Oswal Financial Services, and its sub-agent MAS Consultancy had not done enough to meet their regulatory obligations. They were supposed to carefully check the trading patterns, verify the correct signatories, and watch out for red flags here. Instead, they accepted questionable documents, allowed trades to go through without raising alerts, and never flagged the suspicion that Hemant, rather than Jaya and Sham, might actually be operating these accounts. But between all of this, a very important piece of the puzzle was whether or not Hemant's recommendations on TV were truly strong enough to affect a stock's price and to make his trades profitable. If he was simply investing based on solid research and it just happened to overlap with his on-air picks, the situation might have looked a little bit different. But SEBI actually found out that every time he recommended a stock, its price and its trading volumes often went up right away, sometimes by more than 10% within the next 15 minutes. And this jump basically showed that Hemant's words on television were moving the market as such. By buying shares first and then letting viewers push their prices once he announced his picks, he was basically making money at the expense of everyone watching his TV show. And after SEBI froze the family's trading activity in January 2021, this suspicious trading pattern completely stopped, which further convinced SEBI that it was never about genuine research or a long-term strategy for him. When SEBI finally completed its investigation, it issued a final order that did three main things. First, it banned Hemant, his wife Jaya, and his mother Sham Mohini from the stock market for the next 5 years. Second, it directed them to pay back a little over 6 crore rupees in profits that had been made through these unlawful trades. Third, it held Motilal Oswal and MAS Consultancy responsible for not following the rules and for failing to oversee the trading accounts properly. SEBI described Hemant's actions as fraud on the market because he had taken advantage of his ability to move stock prices with just a few words on a popular TV show. Many ordinary viewers trusting him for honest recommendations had absolutely no idea that the stocks he was praising on TV were the very ones he had already bought on his personal accounts. So in the end, this particular episode sort of stands as a warning signal that even the most familiar faces on business news channels can misuse their positions. And by understanding how easily a single voice on TV or even YouTube for that matter can shift market sentiment, investors and viewers can better recognize the importance of staying cautious and looking at more than just the advice from a single source. Hemant's story basically reveals that what might seem like an expert guidance on TV can sometimes hide a different motivation altogether, which is one that puts personal gain ahead of the public's trust. On that thought, let's move on to the second story. See, over the past year or so, India's wind power generation has shown no growth at all, whereas on the other hand, solar power generation has jumped up by more than a fifth. Now, at first, you might think that wind and solar both depend on the nature's mood, so maybe this is just a short-term blip of sorts. But actually, when you look at the long-term data, you will see that solar has actually been outpacing wind for quite some time now. A couple of years ago, around early 2023, India's wind capacity was about 42.6 gigawatts and solar capacity was roughly 64.5 gigawatts. Even then, solar had pulled ahead of wind by a very comfortable margin. And if you fast forward to early 2025, solar capacity has now crossed 100 gigawatts, whereas wind is only at about 49 gigawatts. That difference has been widening because India has been adding more solar farms than wind farms every single year. In fact, between 2019 and 2023, solar power capacity grew by rates ranging from about 12.6% to 28.2% every single year, while wind power only managed yearly growth between roughly 2.8% and 6.7%. All of this was noted by Zero Carbon Analytics, which is an organization that closely follows renewable energy trends. But the big question here is, why has solar raced so far ahead while wind has stagnated? See, one big reason is cost. Solar panels used to be very expensive, but over time, a huge supply of cheap panels, mostly from China, has flooded the world's markets. This has pushed solar prices down significantly. Now, there is a chance that trade restrictions and supply hiccups could push solar prices back up someday, but for now, as we speak, solar remains so affordable that most new renewable energy projects in India lean towards solar itself. Wind turbines, on the other hand, are much trickier and pricier to build, and they haven't really experienced the same dramatic fall in costs. Government policy has also played a very big role here. In the early days of India's renewable energy push, wind energy enjoyed something known as the feed-in tariffs. Now, under this system, states guaranteed a minimum price for wind energy, which attracted a lot of wind investment. But that policy is mostly gone now and has been replaced by a competitive bidding process in which solar frequently wins because of its lower cost. cost. The Ministry of New and Renewable Energy, or MNRE, itself pointed out in a Parliament panel report that once India moved to an open auction system rather than fixed prices, wind capacity growth slowed down. Another big factor here is how easy solar is to set up. See, many experts call solar modular, which basically means that you can add or remove solar panels very conveniently. You can almost think about solar panels as Lego blocks. You can snap them together in different places across India. And most of our country has plenty of sunlight, so you don't really have to be too picky about where exactly you place your panels. But by contrast, wind projects require finding the perfect spot with strong and steady wind. You also need to think about the turbine's height, the blade size, and the location. Simply transporting huge turbine parts to the site can also be very challenging. And because solar farms can be built fairly quickly, often in about 12 to 18 months, investors find them less complicated and more attractive in nature. There is also mounting evidence that India's wind potential in some regions might be going down. See, data from Western India suggests that over the past 4 decades or so, wind power at certain sites has dropped by about 12.5%, and the last 5 years have been consistently below historical averages. This is an unwelcome sign for investors and developers who need strong wind to make their projects profitable. And if you think about the geographical landscape of India, although we do have long coastlines and hilly areas where wind can be good, we generally have more locations with reliable sunlight than we have with areas that have strong wind. Now, this difference in geography means that solar is more widely acceptable across the country, and rightfully so. But if you look at the rest of the world as a comparison, you will see that solar's rapid climb is not unique to India. Global solar has grown faster than wind for the past 10 years now, with huge amounts of money flowing into solar projects every single year. According to the International Energy Agency, or IEA, in 2024 alone, nearly $500 billion went into solar projects, whereas all the other power generation technologies put together saw only $426 billion. But at the very same time, wind has had its fair share of success, especially in places with naturally strong winds or supportive policies. Denmark, for instance, leads the world by getting nearly 60% of its electricity from wind. Ireland and Uruguay both get over a third of their electricity from wind as well. Denmark's flat terrain and windy coastline were perfect for wind turbines, and Ireland's Atlantic winds and Uruguay's steady pampas winds also made wind power a logical choice for those countries. And very importantly, all of them introduced stable and long-term policies that encouraged wind energy early on. Even in those places though, governments are now adding solar in their energy mix, partly because solar panels have become so cheap and partly to address what is called intermittency. Both solar and wind are considered intermittent sources because they do not really work all the time. Solar only works when there is sunlight, and wind only works when the wind blows, obviously. In places like Germany, there can be spells known as Dunkelflaut where the skies are cloudy and the wind stops blowing. And when this happens, electricity can become very expensive, not just in Germany, but also in neighboring nations like the Netherlands and Norway. In India though, the government recognizes this issue and they encourage hybrid power projects which basically combine wind and solar in hopes that if the wind slows down ever, the sun might be shining as a backup. But that said, there is a flip side argument that battery storage could be an even better solution here. See, batteries have been dropping in cost, and if they follow a similar downward price path as solar panels did, then solar plus battery systems might become more reliable and economical than relying on the wind to blow when it is dark. And if that happens, some analysts think that wind could lose further ground to solar. But still, predicting the future here is very tricky. It is possible that wind could make a comeback if offshore wind technology becomes cheaper or if policymakers come up with new incentives to boost wind power. For now though, solar is clearly winning because it is simpler, more affordable, and more widely available. And that momentum seems likely to continue unless something very major changes. And for a country that has both sun and wind in equal abundance, it might be a very interesting toss-up. But in India, and across much of the world for that matter, solar is currently pulling ahead because it ticks more boxes for both investors and governments. That brings us to the end of the 2 stories of the day. With that, let's move on to the final section and talk about the quick news headlines. First, terrorism insurance premiums in India are set to decrease by up to 15% starting April 1st, following a rate revision by General Insurance Corporation of India, or GIC, the administrator of India's terrorism risk insurance pool. Established on April 1st, 2002, the pool was created after global reinsurers scaled back coverage post the 9/11 attacks. Second, IndusInd Bank, which is India's fifth largest private lender with a balance sheet of approximately 63 billion US dollars, has hired Grant Thornton to conduct a forensic review into accounting irregularities that were discovered earlier this month. This issue pertains to an overhaul of about 2.35% in its derivatives portfolio, amounting to roughly 175 million US dollars. Third and the final one for the day, India's used car market is projected to reach 40 billion US dollars by FY 2026, with expected sales of 6.5 to 7 million units, according to Spinny CEO Neeraj Singh. In comparison, the new car market is estimated to be around 43 billion US dollars, with 4.5 to 4.6 million units in sales. That's all the news and stories I have for you today. I hope you enjoyed this episode. This is your host Anurag Bansal signing off. Take care and I'll see you tomorrow. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.